Hello dear students, welcome to Devika's Commerce and Management Academy. So we are into managerial accounting. Managerial accounting introduction I gave you in the last class. And today we'll see marginal costing, one of the important concept for any management student and commerce students, that is marginal costing. Before going to the subject, let me tell you, please check out the playlist. There are many subjects which already prepared by me by taking a lot of time and energy. Please do share and utilize it and get good marks. Now coming to this marginal costing. Marginal costing, how it is useful to the management. If you see, if you want to take any decisions as a manager, as a management, if you want to take any decisions like how are the sales and how much sales are increasing, what is the profit level, and when we are going to get the profit, and how to take up the decisions, planning, forecasting, all these things, if you want to take proper decisions, marginal costing, which is going to be definitely helpful for you. So in marginal costing, what do we discuss is here cost, volume, profit, sales, and these are the main important aspects we'll be discussing. And of course the cost means, you know, there are different kinds of cost like fixed cost, variable cost, semi-variable cost, but in marginal costing we'll be discussing only two types of costs, that is fixed cost and variable cost. And there is another concept, absorption costing. In absorption costing we'll be discussing fixed cost, variable cost and also semi-variable, but in marginal costing no semi-variable. If you find any semi-variable expenses also, that will be adjusted into the variable cost, but no semi-variable. Now here we will be discussing how we can take the decisions through the marginal costing. This is one of the important tool to take the decisions, especially for the management. Now what is the definition for this marginal costing? A simple definition which is given by the Institute of Cost and Management Accounts, London. What they have said, the ascertainment of marginal cost of the effect on profit, the ascertainment of marginal cost on the effect on profit of changes in volume either in the sales or profits, any kind of changes in the volume or type of output by differentiating between fixed cost and variable cost. Changes, what kind of changes we are finding it towards the profit, and different types of costs like fixed cost and variable cost, that will be discussing into the marginal costing. And if you see what is marginal costing, what are the uses and all these things, definitely after completion of this marginal costing, once again please come to the same lecture and hear my talk. Then you will have more understanding, because you will be completing all the practical problems and you will come to know what is it and what we are doing and how we are getting the difference and how the technique will be useful for the management. Everything you will come to know through the practicals. That is why I would advise you to come back after completion of the chapter to this same lecture, theory lecture. So it will be easy for you to understand, and in the exam never leave such kind of questions easy, because you have done practical, the same practical thing you are talking in theory, that's it. Okay, now this is the definition of marginal costing. Now coming to the basic characteristics of marginal costing. First thing is that to help management in taking managerial decisions. Marginal costing is going to help the management in taking managerial decisions. Managerial decisions like sales we want to increase, and profits we want to increase. If you want to increase the profit, how much should be the sales? If we increase the sales, how much will be the profit? Vice versa, that kind of decisions. And shall we decrease the price? Shall we increase the price? If we decrease, what happens? If we increase, what happens? Like different concepts are there. So all these things definitely going to be helpful for the management while taking managerial decisions. This is the very important basic characteristics of marginal costing. And second thing is that all elements of cost production, admin, selling and distribution are classified into variable and fixed components only. There are different kinds of variable cost like production cost, admin cost, selling and distribution cost, These are all we can't generally define as fixed and variable only. But in marginal costing, all these things are classified into variable and fixed components only. In the introduction only I told you, we have only two kinds of cost in marginal costing. One is variable and fixed cost. So all these expenses comes under the variable cost, and there is another cost, that is fixed cost. Okay. And next one, the variable cost. Variable cost, generally we can say it as a marginal cost. Please remember this point. Variable cost, in other words, we can say it as a marginal cost also. The variable costs are regarded as the cost of the production. Main cost of the production is, we call it as a variable cost only. Why? Why not fixed assets? Why not fixed cost? Fixed cost is fixed. It will not change. The most of the time fluctuations are going to occur only in case of variable cost. That is why we say in marginal costing, the variable costs are regarded as a cost of the production. Are you getting this point? Next one, fixed costs are treated as per the cost. Fixed costs are treated as per the cost, means whatever may be the cost, same will be treating, and these are charged to profit and loss account. For example, you take electricity, fixed, every month will be getting. Maintenance, lease amount, rent amount, or post office, any kind of expenses fixed, no changes. So these are all treated as period cost, and it will be charged to the P&L account directly. And another thing is that the stocks of finished goods and work in progress are valued as marginal cost only. The stocks of finished goods and also work in progress, these two are also considered as marginal cost. For preparation of finished goods, for the final finishing of finished goods, work in progress, both the things we consider it as marginal cost only. Whatever we spend for that, it is marginal cost. And last one, prices are determined on the basis of marginal cost. Marginal cost, how much it is increasing, decreasing, based on that we are going to fix the prices. Determination of prices are based on the marginal costing. These are the main basic characteristics. Okay. Next we will see advantages. Advantages, benefits of marginal costing, how it is useful to the management while taking the managerial decisions. The first thing is that marginal costing is simple to operate. Simple to operate and easy to understand. Anyone can understand easily. There is nothing like basics of accounts, fundamentals, all these things are required, technical knowledge, no, nothing is required. Simply anyone can understand this. Even management also, they can understand this concept. That is why we say it as a main advantage is that it is simple to operate and easy to understand. And cost control. Through marginal costing, we can control the cost. How? Variable cost, we are focusing more on this marginal costing. Variable cost is deciding the cost price. Variable cost is deciding the profits. Variable cost is deciding the sales. So as per that, we can control the cost. If variable cost is increasing, then we want to decrease it. By decreasing variable cost, we can decrease the marginal cost. So cost controlling is based on the marginal costing, that we can control it through the variable cost, and it helps the management in taking decision. Helps the management in taking decision. Just now I told you, when we wanted to increase the price or rate, sales, profit, what will happen if I do this? Then what will be the change? If I want that, then what is required? Like this kind of changes, it is possible through the marginal costing. Marginal costing will give the clarity to the management. That is why it is easy to take the decisions. And in the same, overhead simplified. In marginal costing, overheads are easy to understand. It is simplified. Why? We have only two overheads. One is fixed overheads and variable overheads. Fixed we will come to know very clearly. And in the semi-variable also, there is no confusion of semi-variable cost, semi-fixed cost, there is no confusion at all. So overheads are simplified, easy, anyone can identify easily. And in the same way, stock valuation. In marginal costing, mainly when you wanted to calculate the stock, how much stock is left, how much is finished goods, these calculations are very easy, because we'll come to know at every level cost per unit value also will come to know. When we come to know all these things, then stock valuation is easy. Okay. In the same way, aid to profit planning. This is going to helpful. It is going to be aid to the profit planning. We want profit. How much profit is required? If we want particular profit, say for example, we want a profit of 1 crore. Expecting a profit of 1 crore. If I have to get a profit of 1 crore, what would be the sales? That calculations we can do it here. Now, once if you come to know that sales should be like 5 crores, then only we are going to get the profit. Then we'll be focusing most of the time on the sales to get the 5 crores of profit. Then, 5 crores of sales. Then automatically we'll get 1 crore profit. So this is possible. That is why we say it as aid to profit planning. Want a profit of 1 crore, then your sales should be 5 crores. It is clearly mentioned. So you can plan accordingly.